How do you build business credit in 2021? That is exactly what we are going to jump into in today's training. We are going to run an hour plus, but by the end of this training, you're going to know what business credit is. You're going to know how it works. You're going to know the benefits it provides you. You're going to know the step-by-step formula for 2021 to be able to get credit for your business EIN that's not linked to your personal social. I'm going to show you how to get business credit when you can't get any other kind of financing. I'm going to show you how to get business credit without a personal guarantee, without a personal liability, separating your consumer and your commercial credit. And I'm going to teach you how to get business credit regardless of personal credit without a personal credit check. So whether you have good or bad personal credit, you're able to build business credit without putting any inquiries on your personal credit report and without your consumer credit quality controlling the actual results you get while you build business credit. So a lot of things that we're going to cover today. Let's jump in. Today, we're going to talk about exactly how you can build business credit for your EIN that's not linked to your personal social security number in 2021. All new vendors, update on process, everything you need to know. We're going to be diving into talking about how to beat the banks and become fundable. They have a secret formula they don't want you to know about that they look at to determine if you should be approved for money, how much money you should get, and the rates and terms you should pay. We're going to decode that formula to help you get the most money at the best terms for your business. We're going to talk about how anybody can build business credit. If you have a business in the United States, you're going to be able to succeed with this. Doesn't matter if you're a for-profit, nonprofit, I'm going to show you how to get that done. We're going to talk about brand new vendors that are our new personal favorites here in 2021, and some of the old ones that have now come back that used to be our favorites that are now reporting, and a lot of cool things that will help you build business credit without having to provide a personal guarantee or credit check to get the initial credit on your business credit reports. And we're going to talk about how you get high limit revolving credit cards as well in your business name that's not linked to you personally, how to do all this with no credit check, how to do all this with no personal guarantee. And we're also going to talk about how to get approved for up to $150,000 in credit lines, even as a startup business that will help jumpstart your business credit building process. A lot of questions are going to come in along the way. I'm going to have literally thousands of people here in the webinar and in the live stream. So if I don't get to your questions, I'm not ignoring you. I'm going to get through this and then I'm going to hang. I cleared a whole hour after this just to make sure that I have time to answer all your questions. Somebody's asking right now how to become a partner. We're going to cover that today as well as many other things. So look, you're in the right place if you're looking to get money to grow your business. If you've tried to get money before, a loan, a credit line, building business credit, you failed, I'm going to decode how you can succeed there. If you want the easiest and fastest way, if you want to take years of business credit building and condense it to months, then I'm going to give you the formula for that as well. If you want your business to fund itself, where you don't need to personally be the signer for all the money that you're getting in the business, we're going to decode how to make that happen. If you want to get away from those personal guarantees, and if you want to get the most money for your business at the best terms, I mean the lowest rate and the longest terms that give you the lowest payments, all of that, we're going to decode the formula today. You're going to get it all. I won't dive in and tell you a lot about myself. I can just tell you that along the way, we've helped about 42,000 business owners with this process. It's very important. Look, there's a lot of gurus on YouTube and other social media channels that have succeeded doing something for themselves, and they're teaching you what they do. Thank you to all those people that learn something and teach the rest of us entrepreneurs how to do it. I am not that guy. I'm the guy that's here going to tell you how we've helped 42,000 people through this process, and all of the knowledge that we've gained from helping those 42,000, I'm now here to pass on to you to teach you the end result of the fastest way to achieve this. We're Best Entrepreneurial Company in 2018 by Entrepreneur Magazine, Inc. 5000 in 2019 and 20, A+ rated with a BBB, and we are not accredited. That means we didn't buy our A+. We earned it because we don't have complaints. We have hundreds of reviews online, hundreds of actual results and case studies on our website, and I'll show you many today as well. And I'm features oftentimes on radio, TV shows, podcasts, Entrepreneur Inc., Forbes, those type of publications. I only tell you this so you know that I'm credible and that we are credible to have this conversation with you today about how you can succeed with building business credit. So if you're staying to the end of this training, there's several things you're going to get. You're going to get a playback of this event, which is priceless. You're going to get 30 days of free business credit monitoring with Dun & Bradstreet, Equifax, and Experian. They charge $249 for that. I'm going to get you your reports at no cost. And I'm going to get you set up with a no-cost consultation with our team. If you ever look at our reviews online, you'll see most of our reviews are about this phenomenal experience people get on the consultation with us. I'm going to get you all of that if you're staying to the end for free. I'm going to show you how to tap into all of that. So Look, let's talk about the problem. Getting money for a business is hard. Per the Bureau of Labor and Statistics, more than half of businesses will fail in 5 years or less. 82% of them are basically failing because of issues with cash flow. And 90% of business owners agree that the ability to get loans is difficult for them. As a matter of fact, a large percentage of business owner, this is what keeps us up at night, is thinking about the financial problems of the business. How are we going to get the money to actually grow the company? So that's the problem that we are here today to solve. So how do you succeed with getting money? Well, we figured it out with 3 very specific things you must do if you want the most money at the best terms for your business. First, you have to be able to actually set up your fundability the right way. There's this criteria that lenders and credit issuers look at. They determine if you should be approved, how much you should get, the rates and terms you pay. Those fundability requirements changed in 2020, obviously with COVID, and now it's a whole new world in 2021. We're going to decode that today. You also need to get business credit for your EIN that's not linked to your social. Think of it like this. Imagine trying to go to get a car loan, trying to get a credit card, trying to get a mortgage, and having bad credit or no credit established. It's very difficult to do as a consumer. Same thing in the business world. Building and getting money for your business is very difficult to do if your business doesn't have a credit report that reflects it's responsible enough to pay its bills. This is why you have to establish business credit. I'm going to decode that today. And the third part is you have to be able to access capital in one place. Look, there are thousands and thousands and thousands of different lending opportunities out there. But if you go to most of these lenders' websites, they don't even tell you what their approval criteria is. So you don't know that one's based on consumer credit quality, one's based on your cash flow, one's based on your collateral. So you have to be able to have access to all capital in one place. And by the end of this training, I'm going to teach you how to access that as well today. If you do these 3 things, that's what will help you get the most money at the best terms in your business. And I'm going to teach you today how to do all of that. And again, a lot of you have questions and comments coming in. I'm not neglecting you. I promise you I'll get to you. I'm going to hang out in the end. You have me for a full hour to make sure that all your questions and comments are answered. So let's talk about fundability. So think of it like this. If you've applied for a credit card before, you've either received an automated approval or you received that dreaded message that you'll hear by mail in 7 to 10 days. I laugh when I say that because that has never worked out well for me. I always get the mail and it says they turned me down and what bureau they pulled. So we understand that instantaneous is what's an instant approval or denial is what ultimately the lender's coming up with. We know somebody's not looking at it to make that decision. We understand computers are doing it. This is what we call fundability. What these computers are looking for in your application will surprise you. It surprises many people. And the reasons you get denied for credit financing will also surprise you because they're not things like you think, like your revenue or your credit. It often has to do with one of these fundability issues. So if you know what fundability is, you know what to fix and how to set up your business the right way, this will account for more than half of the denials you may see. So by fixing basic things about your business, you can take a lot of previous denials and turn around and get them into approvals just by improving fundability. Now, there's over 125 factors that we found when we dove in to figure out what makes a business fundable. You can see here, this is kind of our wheel that we created for our own internal team to understand fundability. This was never even created to put out in the world, but I'm showing you this because this is how we look at fundability. And if we zoom in a little so you can see a little better, you can see that there's all these factors that lenders and credit issuers tap into to be able to determine if you're fundable or not. So we can see this little section right here, for example, LexisNexis and ChexSystems are just 2 of those 125. We're going to talk about both the LexisNexis and ChexSystems today. I'm even going to show you how to get your reports and fix that stuff without having to pay for that either. So again, there's all these factors that tie into fundability. And if you set up your business where it's fundable, this is the stuff that lenders and credit issuers are looking at. This is what makes you credible. This is what makes you lendable with actual lenders and credit issuers, because this is where they see that your business is worthy of being issued a credit line, a credit card, or a loan. So you got to make sure that you fix a lot of things when we talk about fundability. Now, some of the changes this year is, first of all, you have to make sure your entity setup that has not changed into 2021. Lenders and credit issuers look at a corporation, a partnership, or an LLC preferably. They look at that better than a sole proprietor. You don't ever want to be a sole proprietor. You just don't. It makes it very difficult to get money. And look, I'm not an accountant. I'm not an attorney. This is not legal or accounting advice. But the statistics are that a sole proprietor gets audited 1 in 7 times by the IRS. A corporation's 1 in 50. So not only do you dramatically reduce your chances of getting audited by being a corporation, but you also look a way better for lenders and credit issuers. So be a corporation if you can. If you don't want to do that, consider an LLC or consider a partnership, but avoid sole proprietorship at all costs. Okay, the type of phone number that you use. We are looking at business phone numbers. And what I mean by this is that you don't want to come in and you don't want to use a home phone as your business phone on an application for credit or financing. You don't want to use a mobile phone. You want to use a business phone number, an actual plugged into the wall business phone line they set up, or you can use a voice over IP or what's called a VoIP phone, but you still want to avoid Google Voice into 2021. I don't know what the deal is, but for some reason, we see a lot of vendors, a lot of credit issuers not liking Google Voice numbers. So that's one thing that can get you denied for credit and financing. So you can use things like Ring Central. You can use Freedom Voice. There's a lot of these VoIP numbers out there that you can get, but make sure you get a phone number. Make sure it's toll-free. Lenders and credit issuers still look at toll-free numbers as being more credible than non-toll-free numbers. So have a toll-free number even if you're a local business. You don't really need to have a business fax number. I've always said in the past that one of the fundability requirements is the business fax number. It does look better if you have one, but it's not something that we've seen people getting denied for in 2020. So if you don't have the fax number, it's okay. Just get the phone number, get it to be listed or get it to be toll free and get it listed with 411. Listing that number with 411 is very, very important. This is still one of the big factors in 2021 that we're seeing credit issuers look at, especially vendors, is if your phone number is listed with 411. You can go to a company called listyourself.net, listyourself.net, I think it's .net, and they can actually set that up for you at a cost. I'll talk to you about how you can get that for free as we get later into this training. The type of address that you could set up for your business. You still need a physical business address. If you can get one, you still need a virtual address. I know COVID has moved a lot of businesses into the home, but the credit issuer and lenders have not changed their perception here, where a business with a real physical location looks more credible to them than a home operated business. Not me. I'm here teaching you what lenders and credit issuers are looking for. So you really need to make sure that you have a business address, like a retail location. If you don't, consider a virtual address. Our favorite is still Alliance. You can go to DaVinci, you can go to Regis. They'll all help you get addresses that make it look like you're in a big high-rise building in Dallas, Texas, when really you're working from your home. You're just using that address for mail purposes, where you get mail, they scan it in, they email it to you, and you still have the benefit of making it look like you're in a big physical location, even when you're not. Now, in 2021, we are seeing Dun & Bradstreet make a bigger move to putting Google Street Views of your business on your business credit report. So remember, if your home address is your business address and that's what you're using and that's what you're telling the bureaus it is, then you can expect to see a Google Street View of your house on your commercial credit report in the months and years to come. We see that in 2020, DMB was experimenting with that, and we're starting to see that happen more and more as we move into 2021. Type of licensing you have. If you have a license, there's a lot of credit issuers that look more favorably on your business. Don't know why. But if you can have a license, it makes you look more legit to lenders and credit issuers. In Florida, you can get an occupational license in a county, even though you're not required to. So getting occupational licenses, getting a license in your industry, in your state, in your county, definitely helps and goes a long way. Today, I'm going to teach you about a vendor that will give you like a $2,500 credit line just because you have a business license. Congruency of records still remains in 2021 the number one fundability factor you need to focus on. The reason most of us get denied is because we fill out an application with information. The lender and the credit issuer automatically defaults to thinking that it is a fraudulent application because most applications they get are fraud. And it's even worse through 2020. So all these fraudulent applications come in and you submit yours and they're trying to see if yours was fraud or not. So what they do secretly behind the scene is they take all this data from your application and they're checking it against these secret credit reports I'm going to teach you about today, these secret databases, they keep it, and they're just seeing if the information matches or not. If it doesn't match, then what happens is they automatically assign the application as fraud and they kick it to somebody for manual review. And, you know, if you're that person and a computer just said this is a fraudulent application, You got to really not like your job. If you're going to say, no, computer, you're wrong, that application's fine. So most of those manual reviews result in denials because if the computer thinks it's fraud, that person's usually not going to trump that decision. It all happens because of an incongruency of what's actually happening online. Remember Dun & Bradstreet, Experian, Equifax, they're getting information from your Facebook page, from your social media pages, from your website. They have crawlers that are crawling the yellow pages. They're looking for all of this. So you got to make sure all that information is congruent, especially with your Secretary of State records. This is where almost 90% of entrepreneurs mess up. They set up their Secretary of State record, their business entity. Then they get their business address and phone number. Then they never go back to the Secretary of State and update it. You got to make sure that you do that. If you don't do that, then the very first place that they compare your application to is Secretary of State. And the first thing they find is your name, your address, your phone number doesn't match. They think the application's fraud and you're denied. It's not because of your credit. It's not because of your revenue. Guys, I can't tell you enough. Client after client after client after client we help. We fix basic fundability stuff I'm teaching you today, and they go to the same sources that had just denied them, and they get approved. So you've got to make sure that you fix this congruency, especially with Secretary of State. It's one of the biggest reasons you're getting denied and getting bad terms, and you don't even understand or realize it's happening. The type of references you have. You need to set up a business bank account quickly in your business. You need to have a bank reference that you can use on these applications. As we get into 2021, more and more credit issuers want you to have references from your bank on that application. So they're going to be asking you for it more than they ever have before. Whether your bank account is set up or not, you have to have a business bank account set up. So many things, from your check system's credit score to your bank rating that's used to determine if you should get loans, to all kinds of loans that are available through things like revenue lending. It's all based on you having that business bank account set up. Like if I had to tell you 2021, one of the top five things to do to make your business fundable, having a business bank account set up would definitely be in the top five, if not the top three. You've got to get that done. The way your website and email are set up, make sure you have a professional website set up. Don't set it up on like a WEX URL. You need to own your own URL. It's very important. If somebody's actually having an audio issue. So is everybody else, if you're able to, can you hear me okay? If you're in the webinar, let me know if you can hear me okay, if you don't mind, because I've got some people with some audio issues. Yes, okay. So it looks like those audio issues might be on your end if you're in the webinar and having a hard time hearing, which that might not be okay, because everybody is saying that the audio is okay. So my apology to those that might be having issues, might be on your local computer end, okay? And the numbers you have, you need to have a DUNS number set up. I'm going to teach you today how to get it done at no cost. You need to have an EIN. Believe it or not, you could be in business and not have an EIN. So you need to have an EIN set up, and that is something that I'll teach you today how to do. Actually, I don't need to. You can just go to irs.gov to do that. And you need to have a BIN number, a business identification number set up with Experian. And that's something that I'll teach you how today to get that BIN number set up as well. So even if you're fundable, you could still be denied, as I mentioned, because of potential fraud concerns. So let me explain to you again and what happens. Lenders and credit issuers get your application. They pull secret credit reports behind the scene. They match the credit reports with this information to see if it's congruent. Some of this stuff comes from LexisNexis, Dun & Bradstreet, Experian, Small Business Financial Exchange, and Equifax, and check systems. Dun & Bradstreet, Equifax, Experian are business or commercial credit reporting agencies. They're just like Experian, Equifax, TransUnion on the consumer side, but they populate credit reports for businesses. We know who they are. We'll talk about more of them today. LexisNexis is the root of all evil. Everything comes from LexisNexis, guys. Law enforcement, insurance companies, lenders, credit issuers, they're all pulling information from LexisNexis. Let me give you an example, a recent example. Okay, I had a new watch and I went to get it insured. I got denied for the watch because of my LexisNexis insurance score being too low. It just happened to me a week ago. So I called them up and said, I know about LexisNexis. Why is it denied? I got from them, they're not even looking at the data. They're not even looking at it. They're just looking at the score. So she couldn't even tell me. The underwriter, I'm talking to an underwriter, can't even tell me what the data says, just tells me my score is too low. That's fine. That gives me enough information to go get my insurance report with LexisNexis and my score, address anything that's a concern, and then go back and apply, and I will get denied. That's why you need to know this stuff. If you know where they're getting the information and you know then how to fix it, you can come in, you can get it fixed. then you can turn around and you're able to get approved. Check systems is what is used. It is a report and score that actually looks at how you actually manage your bank account. So you need to know about that. And the SBFE, they are something you really need to know about. The SBFAE is a third-party data aggregator that is owned by its members. Its members are banks. Wells Fargo, Chase, Bank of America, they're all members of SBFE. SBFE has a very simple philosophy, which is called give to get. If you want to be a member of SBFE and get information, you have to be willing to give all information. Here's what that means. It means Bank of America, everything you put on an application, you submit to Bank of America, that goes into SBFE, and Bank of America is sharing it with every other bank. So if you go to apply for a credit card and you put your revenues $300,000 a year and bank on your Bank of America application, then you go to apply with Wells Fargo and put your revenues $350,000 a year. What you might not know is that Wells Fargo and Bank of America see the information you're putting on each other's application. It happens because of SBFE. All information from what you put on an application to how you pay your bills with that loan, credit line, or credit card all gets funneled into SBFE, and every bank can access it. So we don't realize this. And we change a thing on an application, like our revenue a little, or this a little, or that a little, from bank to bank. We might even get a denial, think we learned lessons, and go back and change the application for the next source. What we don't understand is SBFE is all sharing it anyways. They all know what you put on the other lender's application. So this is part of why you're getting denied, because they're all sharing information through these third-party data aggregators. And then they know what you don't think they know. And they oftentimes think the application is fraudulent because that information is not congruent. It's how a lot of denials happen. Now, if we look at LexisNexis, here's some things that are on your LexisNexis credit report. If you've never seen it, it is the most intrusive thing you will ever see in your life. Mine is over 300 pages thick. I could grab it right now and pull it up. It's a book. Here's some of the stuff that's on there. Every home you've ever owned, the value of the home, the sales prices, the building materials of your home, the homeowners association, number of bedrooms, baths, roofing units, AC units, deeds, mortgages, title companies, interest rates, loan amounts, terms, loan types from every mortgage, every phone number and email address you've ever had in your life, every license you've had, firearms, boating, mortgage, pilot, and any violations on those licenses, traffic tickets, felonies, misdemeanors, sex offender records. Give you an example. When I went to get my SBA loan, they asked me if I'd ever been convicted of like felonies, misdemeanors. And I said, no, I'm a straight shooter. Okay. And then they came back to me and said, sorry, you actually have 2 misdemeanors on your record. Now you have to explain what happened and why you lied to us. Guys, I had to literally pull a background check on myself to even remember what they were talking about. And all this happened when I was in my teen years, when I was in the military, and I had to do with popping a wheelie on a motorcycle, trying to impress a female cop. There's a whole stories behind this stuff. It was awesome at the time. But 20, 30 years later, it's still haunting me because it's on my LexisNexis credit report. I don't even think about this stuff, but it's one reason, an example of how this information is hurting your ability to be able to turn around and get money. Aliases, all name variation, marriage, divorce records, every vehicle you've ever known, including VIN number, every insurance policy you've ever had, and the details of those insurance policies, every business you've ever been associated with. So, because I used to be in the consumer credit industry, I get denied a lot of times for bank accounts, for merchant accounts. When we figured out they were getting it from LexisNexis, we deleted and had that information removed. I never had those issues again. Another example of how understanding where they're getting the data and correcting it will help you. Family info, including children, loans, leases, aircraft and boating records, public records, including bankruptcies, judgments, lawsuits, and liens. When we went to get our SBA loan, they wanted to actually ask for my home as collateral. Very weird request considering our account receivables are worth way more than the loan amount. Come to find out, there was 2 judgments on there that they didn't like that was on my LexisNexis credit report, which were not Equifax, TransUnion, or Experian. Worst part, they weren't even legitimate judgments. They were wrong. So we had to go through and prove to the lender that the judgments weren't correct, then go to LexisNexis and fix that issue. But once we fixed it, our ability to get loans, credit cards, and credit lines was significantly better. One more example of where they're getting information and why having it not addressed on your part becomes a problem getting financing. Education information, including degrees you have, schools, dates, attended, graduated, military records, online records, all of your short-term credit. Guys, that is your LexisNexis credit report. It's not all that's on there. I just ran out of room on the slide. So this is the kind of stuff that lenders and credit issuers and insurance companies and law enforcement knows about you. Here's where they're getting it. Get the reports and fix it. Our clients, we get Check Systems credit report. We get LexisNexis credit reports. We help them get those. We help them fix inaccuracies because it's so important. It is such a big deal. That is why I'm teaching you about this today. So even the slightest change to one fundability factor can turn an approval into denial. And this is one of our clients, Herman, that happened with. With Credit Suite, your one-on-one consultant calls you every 24 hours of signing up. They call you at least 5 times in a week in the first 2 weeks. And then thereafter, even though it's been several years, I still get calls. My one-on-one consultants still call me every other Wednesday without fail. And that's absolutely incredible. My favorite line of credit I got is a $10,000 Amazon card I use to purchase things low and sell high on different marketplaces. I also was able to get a $40,000 Amex business card. None of my accounts show up in my personal credit report, so if I max them out, it doesn't hurt me personally. So I was able to purchase 2 properties in Cleveland, Ohio, and it's been a blessing. Do you want a $40,000 Amex card? What Herman's story is that we fixed some issues with his fundability as part of our process with our business advisors, and he turned around and went from getting a denial on his credit card to getting that approval. That's what the power of fundability is. It takes these credit lines, these credit cards, these loans you once applied for and got denied, and it turns around and starts making those easier to turn those around and get approvals because of issues with fundability. It's not your qualifications, guys. In a lot of cases, it's the fundability not matching up. That's why you got denied. So fix fundability, and it makes all the difference. Now, when you get a home loan, when you get a car loan, when you get a credit card, you know your consumer credit's being pulled. You know it's important. The same applies for a business, but let me tell you why you might not know that. In the consumer world, there's a law called the Fair Credit Reporting Act, and this law requires if a lender pulls your credit report, first, they need your permission to pull your credit report. It's called permissible purpose. Secondly, if they pull your credit report and deny you based on something there, they have to serve you up with the letter explaining to you why they denied you. The Fair Credit Reporting Act does not apply in the business world. It does not apply to business credit reporting agencies or business lenders or credit issuers. So the problem is that first, they don't need your permission to pull your business credit reports like they do consumer. So they're getting these credit reports from us to make all these decisions, suppliers, lenders, credit issuers, insurance companies. We don't know they're getting it, and they're making all kinds of decisions based on the information and not telling us because they don't need to. They're not required to tell us they denied us because of what was on Dun & Bradstreet. So it's all happening behind the scenes. We're applying for credit. We're applying for a loan. We're getting denied, and we don't know that the reason is because our business credit quality sucks or is not established. Now, you might say, my business credit quality doesn't suck. It could suck, and you don't even know it does. And here's why I'm explaining that. 2 of the credit reporting agencies, as I'm about to teach you, will give you failing business credit scores even if you don't have any credit. So this is why a lot of times you're getting denied that loan, credit card, or credit line to be able to that you want because you're not able to get approved. You're not able to get the high limits that you want. You're not able to get the rates and terms you want, all because of your business credit quality. So we got to fix that today during this training. So you want to get approved with business credit regardless of consumer credit quality. It's one of the huge benefits. You don't have to have a personal guarantee. I'm going to teach you how to get this credit without personal liability. Okay, there's no consumer credit inquiries, a huge benefit of building business credit. Look, even if you have great personal credit, you don't want to have inquiries on your credit report when you're trying to get business accounts. Okay, some loans, credit lines, you need to, but credit cards, you don't. If you're going to get a business credit card, you shouldn't put an inquiry on your personal credit report. And that's a big deal because those inquiries will cost you a tremendous amount of money in financing that you could get if they're not there. So I don't care if your credit's excellent or bad, you need to prevent these inquiries from happening. And the way to prevent it from happening is to make sure they're not even pulling our consumer credit reports. If you're building business credit the right way, I'm going to show you this, you're going to get limits 10 to 100 times higher than with consumer credit. A lot of our clients, and I'll show you actual approvals, are getting $10,000 limit credit cards 30 and 60 days into this process. It sounds outrageous, but it's really not. Businesses spend more money than consumers. The limits on these accounts are way higher. So not only is it easy to build business credit if you get the right steps, and I'll show you these, then you also have a chance, not have a chance, you will also almost always see a significantly higher approval amount than what you'd see on the consumer credit side. The credit's very fast to get because your scores are based on how you pay your bills. Dun & Bradstreet, Equifax, and Experian Commercial all have 5 scores, but the primary score they use is all based the same way. It's based on how you've paid your bills in the past. If you pay them early, you get a 90 score. If you pay them on time, you get an 80 score. If you pay them late, you get 70 score. If you pay it 60 days late, you get a 50 score. It's all based on how you pay your bills. So all we have to do is get you accounts that report on your business credit reports that you pay on time or early. That gives you a good score. Then we have a foundation with those accounts reporting a good score. We use that as our foundation to springboard off of to get all the credit that we really want. I'm going to show you how to do that today, but it's very easy to do compared to consumer credit because business credit scores are primarily just based on how you pay your bills. Inc., SBA, Entrepreneur, Forbes, they all tell you to build business credit for the same reason. You've got to separate your consumer and your commercial credit report, okay? So that being said, and some people said that they're not able to hear, but I think everybody's okay. Okay, so everybody's good. All right, so and somebody asked, is it truly live? I love that. There's no reasonable way to prove that when it's actually live. So you've got to separate these consumer and these commercial credit reports, okay? If you don't do that, you're always going to be personally liable for what happens in your business. But most importantly, I think the number one reason that you want to build business credit, this information is publicly accessible to anybody that wants it. Lenders, credit issuers, suppliers, prospects, clients, competitors, people that want to buy your business, anybody can and will access your business credit reports. So you've got to build the business credit reports because this is your credibility. This is the front-facing credibility that all of these sources will see, and any of them that want to can see your business credit reports. As a matter of fact, if you go to D&B, Equifax, and or Experian, you will see that the number one thing they do on their credit reports is they actually ask you if you want to get a credit report for your business or somebody else's business. So you've really got to make sure that you build your business credit reports. If you don't do that, then the problem is that you don't look credible, okay? And that is one of the reasons that you need to make sure that you're actually doing this. If you don't, then what happens is you just don't have what looks like a credible business to the people that you want to make sure that you actually have a credible business set up with. So you also need to know that you can be issued a failing business credit score even if you have no credit reporting, okay? And that happens, and I'll show you exactly what this looks like. Experian and Equifax will create a failing business credit report and score for you, even if you have no credit. Now, Dun & Bradstreet requires 3 accounts in 2021 beyond your business credit reports before they'll create a score. But Equifax and Experian will create a score if they have one piece of what they call firmographic information. That means if they know your business name, your address, and your NAICS or your industry code, they will give you a failing credit report. Here's what I mean. 28 score out of 100, which is a failing score, $1,000 credit limit. That happens, and you can see current financial stability score, about a higher risk as you can get. And this is somebody that has nothing on their business credit reports whatsoever. Hold on one second. Go, quick. All right. Sorry about my 2-second delay. My dog's going crazy, and if I didn't let her in here, I think she was going to scratch through the door. So this is somebody that has no credit on their Experian commercial credit report, but is still issued a failing score. Now, here's the good news. If you have only one account on your business credit report, you can go from a failing score to an excellent score. I'll show you. This person has a 96, almost as high as you can get. The credit limit is going up, and we can also see they're very low risk, and we see that they only have one account on their business credit report. I'm going to show you what this account is as we get further into the webinar. So what I'm saying here is that one account can take you from failing score to good score. Here, I'm showing you from an actual commercial credit report what actually looks like. So you can see they went from a failing credit score here to an excellent credit score because they added one account on their business credit report. Guys, this is why we're here today. Think about it. Go imagine having the worst credit report you can have, adding one account that you pay on time for, you can see, less than $100, and going from as bad as you can get to as good as you can get. You can't do that with anything else other than commercial credit. But this is how commercial credit works. We've got to get good credit on the credit report, paid as agreed, since scores are based on how they pay. then all you have to do is pay as agreed, and that gives you a good score. Now we use the newly established credit profile, the good scores, as the foundation to come in and get all different types of credit. So here, let me show you what else happens as we continue to do this. This is the secret sauce they don't teach you. As you continue to grow your credit, the approval amounts will get higher and higher and higher the more accounts that show on your business credit reports. I'll show you how this works. So here is a $1,000 credit limit. I showed you that to begin with, right? It was the first little image. And these are snapshots from real Experian commercial credit reports. I could show Equifax as well, but I'm just using Experian as an example. $1,000 credit limit recommendation. First of all, you ever wonder why you get one limit one place and another limit another place, or why your limits become higher and higher in time? I'm showing you from a credit report perspective why that happens. Credit limit recommendation, $1,000. Remember, this person had no credit on the credit report. Okay, this was the second one I showed you. They had one account on the commercial credit reports. But here's what's interesting. They went from $1,000 recommendation of credit to $2,500, 2.5 times, just because they had one account on the credit report. Okay, that's interesting. Now here's somebody that's being recommended for nearly $7,000 of credit. Please note, the credit score is bad. It's still not even a good score, but yet they're being recommended for $7,000 worth of credit, and they have 2 accounts on their business credit reports. Here's somebody being recommended for nearly $16,000 of credit, and look, they have 1, 2, 3 accounts on their business credit report. Here's somebody that's being recommended for nearly $66,000 worth of credit. They've got 1, 2, 3, 4 accounts on their business credit report, and here's what we all want to see. $724,000 credit recommendation limit, and they have 15 accounts on their business credit reports. We noticed a trend and a formula in helping 42,000 people through this process, and here's what we noticed. The more accounts you put on your business credit report, the higher that credit limit recommendation is. Now, you might say, do credit issuers really look at that? This box is the most important box on your credit report. This is what Experian pulls out and puts in a separate box to show credit issuers because it's what they care about most. There's 3 things in this box. An IntelliScore, which is the score I taught you that's based on the average of how you pay your bills, the average time frame. Do you pay early? Do you pay late? How early or late do you pay? The second is called a financial stability risk score. Remember that second credit report I showed you, the really high risk with this? This literally depicts your risk of going bankrupt in your business in the next 12 months, going out, ceasing operations, shutting your doors. And the third is the credit limit recommendation. And by the way, financial stability risk takes into account financial data. There's a reason that these 3 things are the first 3 things they box off and show credit issuers. It's what credit issuers look at most. So credit issuers really look at credit limit recommendation. And the bottom line is, the more accounts you add to that business credit report, we've seen this over 42,000 reports, the higher that recommendation of credit. So if you want to get loans, if you want to get credit lines, if you want to get credit cards with the highest amounts, this is exactly how you do it. This is the formula that we've seen that they're using to determine how high those amounts should be. Don't get me wrong. Okay, I've spent 20 years in lending, and I can tell you that other factors like your revenue and other things will absolutely tie into this. But the number one trend that we've seen is the more accounts on a business credit report, the higher the approval amounts are. It's just the way that it is. Okay, so that's a lot of examples of how that works. Now, here's one of my favorite clients, Christine, and she's one of my favorites because I saw her go from having challenges doing this on her own, hired 3 companies and failed. And then she came in and built like a multi-truck operation. It was like absolutely insane. But I like this because it shows you how business credit progression works. She started with small accounts, 2 to 5 grand. In my world, that's small, 2 to 5. Exxon, Tractor Supply, Amazon. She started to jump up into the $10,000, $15,000 range here. We see Lowe's, Apple, Shell, Murphy USA, Office Depot, Sears. Then she starts to jump to the boom. You watch this jump in tiers. She immediately goes from about the 15 range almost immediately up to that top tier of what credit issuers look at, 40, 50. Remember, we saw that testimonial from Herman. He also said 40. 40 seems to be that next tier. Once you start proving that you're using $15,000, $20,000 limit cards, they bumps up to Best Buy 40, Dell 40, Pilot Flying J 50, et cetera, et cetera. She got $185,000 of Ford. You should see this truck. I think I have a picture of this truck that she's buying. It's insane. So here's her actual credit report showing that her scores were high as she's building it. Here's one of her approvals that she used to get 15 grand. Here's her holding a bunch of her cards and says, hey, if you follow Ty Crandall's program, you'll get what you need, talking about the business credit approvals that she has. Here's a $150,000 credit line that she got approved for. So it gives you an idea of what's possible as one person. She's on our $1 million club. One of many of our clients who have obtained over $1 million in business credit and used it, I'd like to say, to fund her business. But the reality is we're entrepreneurs. We're like, bing, bing. We're like ADD, right? I don't know about the rest of you. That's how I am. So she opened multiple businesses like a lot of our clients do, like Herman did, where he said, hey, I sell stuff online. I buy it low and sell it high. I buy real estate. That's what happens is these business owners build business credit as you can, then they're able to actually use it and end up running multiple businesses, which is exactly what Christine did. So here's some recent approvals so you know what's possible. Because I get kind of, it kind of drives me crazy. Sometimes people try to sell you that you're going to get some $250,000 credit line building business credit. Let me show you what real business credit is. A lot of it, you start with vendors, then you move up to retail credit, then you move up to Visa, MasterCard type credit, auto financing, computer leases. Okay, so here's some actual approvals. Here's a $16,000 Sam's Club card. Here's a $3,000 Sam's Club as well. Here's an Amazon that bumped it to $5,000. It's now $15,000 or $10,000 with Amazon, guys. You can buy a lot of stuff to do a lot of damage with a $10,000 credit line at Amazon. Sam's Club for $8,000, Jiffy Lube for $1,400, Amazon for $5,500. Okay, here's a gas card with no PG. She also got Uline, Quill, Crown Office Supplies, Summa, amongst many others. And here's some of those approvals with Texacon, with Amazon, with Chevron. Here's a $2,000 limit with Pennies. Here's a $10,000 Sam's MasterCard. There's a difference between a Sam's Club card you can use in Sam's Club and Sam's MasterCard, which you can use it anywhere. You can use the Sam's Club MasterCard at Costco, for example. It's a cash credit card. Okay, here's another approval for $3,500 with Amazon, a $7,500 with Amazon, or let me see, $3,500. Oh, they looks like they bumped it to $7,500. Pilot Flying J as well. Here's an Exxon approval for $1,000. Here's another approval for $3,000 and on there. Another $10,000 was Sunbelt Rental. Here's a Navy Federal Credit Union approval. Here's a bunch of approvals with Navy Federal Credit Union, Capital One Spark, and a fleet card right here. Dell for $10,000. Oh, bunch of approvals here, right? Strategic Network Solution, Granger, T-Shirt Club, HD Supply, Monetize Your Marketplace, National Pen, Sunbelt Rentals, all with different approvals. Okay, of different approval amounts. Here's another approval for $12,500. Here's a Wawa approval for $4,000. Here's a $40,000 lease with Dell that's approved. Here's a Summa Office Supplies, a $5,000 Kanoko Phillips 76 card, a SunTrust account, and a $2,500 with Robert's Handbag Boutique. I don't know where that place is. Oh, no, that's your approval. I want to buy handbags from you. I got not for me personally, people around me. Here's an approval with Hertz. Another Sam's Club approval here, Crown Office Supplies vendor, $10,000 Sam's card. You get the idea, okay? The bottom line is that that's what's possible with building business credit. You get all these high limit accounts without the personal guarantee and credit check. Here's Kylan Trower, one of our clients. I believe the Business Finance Suite is the best step-by-step paint-by-number system for securing anywhere from $50,000 to $250,000 of business credit that reports on your business credit reports and helps you separate your personal and business credit report. What I like most is I have access to actual coaches that will take you by the hand and walk you through the system and answer specific questions that you have related to business. It's an amazing opportunity. So the reason I show you this is that this is what happens. Kylan's the $1 Million Club. He's one of the ones that's established more than $1 million, got in the business as a partner of ours, and then goes around and he was a gym coach. He wanted to get out of it. He built the whole sales team offering business credit financing, and he goes around, and this is what he does, is he builds business credit financing. He's got over $1 million himself as well. But the nice thing is that keep in mind, the other side of this, beyond using the free information and doing it yourself, is to work with us. And if you're working with our software and our coaches, it literally condenses years of this process to only months, as Kylan's kind of outlining there. So here's some points before I show you some of the steps. Any business can do this. I don't care if you're a for-profit. I don't care if you're a nonprofit. I don't care if you're high risk. I don't care about your NEICS code. If you own a United States business, even if you live in Canada, even if you live in the Ukraine, as long as you have a business in the United States, you can do this. Startups, nonprofits, owners outside the US, it works with multiple businesses. What I'm showing you here today, you can get approved even when you can't get any other kind of loan or credit line. And here's why. If you want to get any kind of loan or credit line, you need one of these three things: cash flow, credit, or collateral. I call it the 3C formula. You need one. I don't care. I don't care what kind of loan or credit line you get. You're not going to get a loan or credit line without one of those three: cash flow, credit, or collateral. But you can still get business credit. You don't need to have cash flow, which means you can get it as a startup. Your credit can be bad because there's no credit check. And you also don't have to have any kind of collateral either, which is needed for a lot of loans like SBA. Anybody can get what I'm going to show you today. So if you're trying to get your business off the ground or growing where you want it to be in 2021, and you're saying, I just need money, but my credit sucks, I don't have the cash flow to get the business started yet, I don't have collateral, nobody will give me money, you can get this. You can build business credit. You don't need any of that stuff in order to still be able to build business credit. So how do we do this? Well, first, we get initial credit, and there's two ways to do this. But initial credit is credit that reports to the business credit reporting agency. Remember what I showed you? We've got to go from no credit report to adding one or more accounts to give us a foundation and a score. So we've got to find credit that reports to the business credit reporting agencies. That's hard because 97% of trade vendors out there don't report the credit that they give you to the credit reporting agencies. One of my buddies, John, buys massive amounts of media for his clients. They do all kinds of advertising, marketing, media plays for their customers. He got denied for a credit line. Actually, they called his credit line due, which is even worse, meaning he had outstanding credit line. They said, you have to pay it off within a month. We want all of our money back. We're shutting your line down because his business credit quality was bad. He called me in a panic. And I said, John, the problem is none of those vendors you're paying actually are reporting the credit payments to the business credit reporting agencies. You got to get credit with vendors that do report, number one. Number two, credit issuers got to approve you with no current credit check or no credit, meaning you can't have any established business credit. And we need people that will give you credit even when you have none. So we've got to have two specific criteria of people that we want vendor-wise to build business credit. They got to report, and they got to give us credit when we have none. And we have options here. We can either use a personal guarantee and good consumer credit to jumpstart the process, or we could do it without personal credit even being looked at with no personal guarantee. We have two options to be able to do this. So the first option I'm going to teach you is based on you providing a personal guarantee and having good personal credit. That's okay. Your credit sucks, don't worry. I'm going to give you two options around that right now. First of all, with this program, you can get up to $150,000 in credit lines with 0% rates. It's no doc. You can get it as a startup, no bank statements, no tax returns. So in COVID, even if your revenue declined year after year or month after year, even if it's still declined, you can still get this. It's still the number one funding program we have going into 2021. You could take cash out of the credit lines. That's why I call it a hybrid. Credit cards, the biggest benefit is 0% rates. Credit lines, the biggest benefit is we could take cash out of the lines and not pay 20% like we pay on cards. Put them together, we get a credit line hybrid. We get a hybrid of the two. We get the benefit of taking cash out of the credit line and the benefit of a credit card is 0%. And we get this insane program where we could take cash out of a credit line at 0%, $150,000 worth of credit. We can buy properties. We can do all kinds of stuff that we can't use the credit line with. Now, credit line hybrid, you have a card. You can use the card for everything that you need card for. But some things you can't go buy a property on a Visa card. I've asked title companies that. Nobody seems to know why, but you can't. But you can take the cash out of that credit line at 0% to buy a property for flipping as an example of how this can be used. Startups are welcome with this. Credit partners are welcome. Even if your credit sucks, 50% of who we help get approved for this program are using a credit partner, a family member, a friend, a potential investor, etc. Maybe it's, and let me give you an example. If I go to my dad today and I say, Dad, I need 25 grand to get a business off the ground, my dad would go liquidate 25 grand worth of stocks and give it to me. But I can say, Dad, I need 25 grand to get my business off the ground. I don't need the money. I need you to sign as a credit partner for me. Then he signs as a partner. I get the credit line for 25 grand. He's not hurt in any way because the credit report's on the business credit reports, not the consumer credit reports, okay? So as a result of that, I'm helping build my business credit. Now, let me clarify. With Credit Line Hybrid, you have a choice. You can get max funding, some consumer reporting, some business reporting, or you can just get business reporting. You'll be given the choice. You choose that. But if you have a credit partner, just get the business reporting. None of it even shows on their credit report. You're building your business credit because these report to the business credit reporting agencies. So even if your credit's bad, you could still use a credit partner that's willing to sign for you. No collateral or cash flow requirements. So again, even if you don't have cash flow, even if your cash flow is declining, even if you don't have collateral, you're still able to get it. Okay. And you can get multiple card approvals. So you can get 5 to 8 different kind of cards, okay, with this one program. Now, why that matters is this. I don't need to tell you. I already taught you. Remember when we showed all these different accounts and we saw that the more accounts that we get, the higher the recommendation of credit? This could add 5 or more accounts on your business credit reports. They're all cash accounts with high limits. So imagine starting a business credit report with $5, $10, and $12,000 credit lines on there. Okay, that's what Credit Line Hybrid will help you do. It expedites business credit building, gets you access to nearly 150 grand. How much you get dependent on the highest credit limit account you have now on your credit report. You get it at 0% rates, no doc. Okay, phenomenal program. Okay, and again, they will charge you a funding fee. The lending sources all do. Usually it's like 12%. Our clients pay like 9.99 because we negotiate that down and we don't keep the money. We give all that money back to our clients. But they roll that fee right into the credit lines the same as they do with SBA. Bottom line, you pay no money up front. You decide business or consumer cards. You decide how much money you want. I mean, they'll cap you typically at 5 to 8 times the highest credit limit account you have. But if you don't want that much, you don't have to get it. And whatever fee you pay, they roll right into the actual credit lines. So that's way number 1 of building initial business credit. Now, way number 2 is we use vendors. We look at vendors that offer net terms, net 30, net 55. Net Amazon gives you a net 55 account, for example, gives you 55 days to pay back whatever you put on that credit line. There's no credit check. There's no personal guarantee. Okay, a lot of them you can use vendors with that you would typically buy normal stuff with, office supplies, etc. And some of them have a minimum purchase requirement. They want you to spend $50 in order to report to the business credit reporting agencies. And remember, you've got to use vendors that do report the credit to the reporting agencies. Here's my favorites for 2021. Uline, they sell all shipping supplies. Crown Office Supplies. Crown Office Supplies, very familiar. I know the CEO well. And they report to Dun & Bradstreet, Equifax, and Experian. I like that a lot because that's 3 payment experiences. I'm going to give you another tip right now. So one account reported on one business credit report is called a payment experience. So if you want to speed up business credit building, then we want to get more payment experiences faster. So in order to do that, we want to work with accounts that report to more than one business credit reporting agency. If we have more than one business credit reporting agency, then what happens is then we have multiple payment experiences. So that means if I go to Crown Office Supplies, for example, then what happens is we can come in with Crown Office Supplies and we can actually get 3 payment experiences because they report to 3 different business credit reporting agencies. So what matters here is that we want to get accounts with those that report to multiple reporting agencies because it helps us build business credit faster. I keep looking to the left here because I'm going to show you what our clients see and how this is actually used. So I love Crown Office Supplies. They have a $99 annual fee, but they'll approve anybody. They report to all 3 reporting agencies. It's an absolute fantastic starter account. Lachlan & Associates, we're back, baby. Lachlan & Associates used to be one of my favorite vendors I recommended for business credit reporting. There was this gray area of whether they were reporting the credit to the reporting agencies or not. Got the CEO on the phone the other day and said, what's going on? He brought his team up. And I said, you're losing a ton of business. We have a whole community out there that will work with you if you report. They are verified. They are reporting to the business reporting agencies. So Lachlan & Associates, they offer some really cool corporate setup type services that could work for a lot of us. Some report to the business credit reporting agencies and SupplyWorks. They sell all kinds of things too that our business use. These are some of them I haven't talked about for years or at all. These are my favorite vendors going into 2021. I told you earlier that if you have a business license, I would tell you about a source that will give you a $2,500 credit line. That is Granger. Granger is notorious for giving you a $2,500 credit line just because you actually have a business license. Now, I was talking about payment experiences. This is the system, the business finance suite our clients use to build their business credit. You can see here the difference. This is why we make it so obvious. Now, these are all grayed out. Our clients can see what's not recommended. They don't have enough payment experiences to qualify for these accounts yet. And then we light them up with green or orange to say, hey, these, I say green or orange because I'm colorblind. I still don't know if it's green or orange. So we light it up with green or orange to tell people, hey, you can qualify for these. So these are ones that I don't have enough trade lines per my sample dummy account to qualify. But you can see here that this reports to DMB, this reports to DMB, this reports to all three. So what I've taught you so far, you know, this will help you build business credit faster because it's 3 payment experiences, not 1. Okay, if we go to Meyer, it's 3 payment experiences. If we go to Quill, it's only 1. If we go to Luke Oil, they report to all 3. It's 3 payment experiences. These are not starter vendors. These are revolving credit, which I'll teach you in a minute. But you see that importance of knowing the where they report, because that is what will tie in and what will give you more payment experiences and help you through this process even faster. Okay, so steps to build business credit. Well, we talked about step 1, 2, fundability. Then we move on and we build the initial credit using credit line, hybrid, or vendor accounts. With 5 payment experiences, I say accounts, but now you're knowledgeable now. You know what payment experiences are. So with 5 payment experiences, you can move on to retail credit. You get that I gave you a big tip there? If you got Crown Office Supplies as a vendor, you already got 3 of 5 payment experiences with 1 account. So I just made it really easy for you to get to the retail credit tier. Retail credit is here. Retail credit is all of these guys. It's Office Depot, it's Home Depot, it's it's Lowe's, it's Amazon, it's Staples, it's Tiger Direct, it's Pilot, it's all these retailers. It's Amazon, it's Costco and Sam's Club and Walmart. It's retail credit. So with 5 accounts, we start to get to retail credit. Okay. And I say start to get to for a reason, because look at this. If you look at our business finance suite works, you can see that we have it broke down into tiers. The tiers are based on how many accounts you need, how many payment experiences you need to get approved. So you can see here, we're saying you need 6 to move into this step. If you have 6, you can get these. If you have 3, you can get this tier. If you have, 10, you can get to this tier, etc. So you can start to get them. Some retailers will give them to you with 5. Other retailers are going to require that you have 10 or more payment experiences, but you can start to get retail credit with 5. Hint, Amazon's one of the first retailers you get, real easy to get with them when you have 5 payment experiences reporting. Then you move to 8 accounts. Then we get into what's called fleet credit. Fleet credit is used for transportation companies that need to put fuel in vehicles and maintain vehicles and be able to fix vehicles. It's credit at places like ExxonMobil here. It's places like Valvoline. It's places here like Pilot Flying J, okay? 7-Eleven. That's what we call fleet credit. So most of this is available on a revolving basis without net terms when you have 8 accounts reporting. And still into 2021, if you want to get Visa card, MasterCard credit, which I showed you real examples of, you can get there with 14 accounts on the business credit report. Remember, by accounts, you're an insider now, so you know that means payment experiences. And if you get one vendor like Crown Office Supplies that reports to DMB, Equifax, and Experian, that's 3 payment experiences. So we understand that with 14 accounts, we can get cash credit, but one of those has to have a $10,000 high limit. In order to get a $10,000 limit, you have to be using the credit you get. One of the worst questions I ever get is, how long does it take to get to the end? You don't get it. You're never going to get there if you think of it that way. The way Christine got over $1 million worth of credit was she got credit she actually needed to grow her business. She came in and got real credit she needed. She got Dell. Then she used the Dell to come in and actually get credit with Dell, right? Now, guys, first time I've asked you, if you're getting value, just do me one favor. Hit the like button, hit the love button. If you really love me, hit the share button. That tells the social platforms this is valuable info and they'll get other people in here, okay? So the bottom line is that you can actually get to the top tier if you have a $10,000 limit, 14 accounts reporting, but you can get a $10,000 way higher than you think. You just have to be using the credit you got along the way. Don't go get a Uline and spend $100 and get a Crown and spend $100 and then get Amazon and spend $100. As you look back, and if you remember the credit reports I showed you initially, your commercial credit reports will show the recent amount of credit you've used on that account. If you're not using them very much or buying very much on these accounts, you're never going to get a $10,000 limit. But if you're actually using the credit that you're getting, then you're going to get $10,000 limit and higher the more accounts you get as long as you're using those accounts. Now, post-COVID, underwriting relationships really matter, okay? This really is a big difference. Don't authorize okay, so some things that are some extra notes. What I mean by that is that credit line hybrid, for example, we saw underwriters shut down. You couldn't even get a Chase card unless you were calling an underwriter and had a relationship to get approved. Everybody was coming to us saying, why is every application with Chase and Bank of America denied? They denied everybody. So relationships with underwriters really matter. Having that privileged information really matters. And keep in mind, we have a whole data team at Credit Suite. All they do is call all these credit sources on a regular basis to make sure that all of our information in the finance suite is updated. If you're not working with us, that's okay. Then formulate your own relationships with underwriters because that really matters. It also matters that you don't authorize a personal guarantee or credit check. Look, one of the changes that we saw take place over the last few years is the government stepped in and mandated credit issuers and banks to. So if you go to get a Staples or Office Depot, they're going to ask for your social to verify your identity. You need to make sure that you're only supplying it to them based on them not doing a credit check and you not providing a personal guarantee. You have to clarify that now that you have to give your social if it's underwritten by a bank. It becomes a necessity. Or otherwise, you'll be offering a guarantee and the decision will be based on personal credit. If you don't want that to happen, you have to clarify that when you apply. Okay, use the credit you get. We talked about that. That's important to continue to get higher and higher limits. You want to pay your bills early. We talked about this as well. Your credit scores are based on how early you pay. And you also need to make sure you get loans and credit lines that report. When I apply for a loan, a credit card or a credit line, I always get to an underwriter and ask, where does this report? If I have a chance between a loan at one place and somewhere else, one place reports the loan, one place doesn't, I always go with the place that reports the loan on my business credit reports. But you have to be careful. By reporting, they may be telling you what's called a UCC filing. A UCC filing just tells other people that you have an outstanding loan. It doesn't show your payments aren't reporting. So you want to ask them, hey, if I'm paying my payments as agreed, are you reporting those payments to a business credit reporting agency? If so, which one? And try to get loans that report to the business credit reporting agencies. I'm going to give you an example. We have a $100,000 credit line that reports to Experian, no personal guarantee, that's not based on consumer credit quality. If you can get up to $100,000 or up to, that's the ceiling, but it's based on how much you process every month in merchant account transactions. So if you process credit cards, you can get that high limit of what you process in a month advanced you in a credit line that reports to Experian without a personal guarantee. We found that credit line because we're conscientious about making sure that we work with lenders and credit issuers that report. So again, you want to check and make sure that the company you're working with or the loan that you get actually reports. Employee number. When you're filing annual reports, a lot of us are about ready to file annual reports into 2021. You need to make sure that you understand the repercussions of the number of employees that you put on the Secretary of State filing, because this is used in lieu of financial data to determine scores like your financial stability score. Remember that score I taught you earlier that depicts your risk of going bankrupt in the next 12 months? That's made up of financial data. Remember I told you that, okay? But here's the problem. If they don't have financial data, i.e. your tax returns, which you can submit to them if you choose to, the business reporting agencies, but if they don't have it, they look at the number of employees you have to determine the financial stability of your business. I have no idea why. It seems absurd to me, but they do. So again, if you're putting 0 employees, 0 to 5, just keep in mind that that will hurt your financial scores with the business credit reporting agency. I'm not telling you to lie. I'm just saying You need to understand when you make X decision, Y result. I'm just teaching you Y result of X decision. You just need to know that that's how that's done. And that's why if you have good financials, you might want to submit them to DMV. You're at the end of 2020. You really want to make sure that you're going actually at the end of going into 2021 as we are, you want to make sure at the end of 2020 that you take tax returns and if you can show some kind of profit. Profitability will go a long way to helping you get financing, and you can then submit those financials to DMV and overcome that number of employees. So you've got to build business credit in order to get the highest approval amounts at the best terms. Here is our business credit building matrix. There is nearly 200 factors that we use into that. And again, the reason I show you that is that even though I make this out to be fairly easy, here's the kind of questions that get asked all the time, right? People are asking all kinds of questions all the time. We get hundreds and hundreds on our social platforms. We come in on a Monday and we have 500 questions on our videos because people, even though they look at this process, they get stuck along the way. I don't want you to think it's easy. I want you to realize that there's a lot of places you're going to get stuck. There's a lot of things that can trip you up. And again, that's why working with experts helps you, right? You take that difficult path of doing it on your own and you condense it to getting it done much faster and much easier. Here's one of our clients, Josh. One thing that's beautiful about Credit Suite is that you start with baby steps. The first thing that we did is get a couple of revolving credit lines and store credit. Then we graduated to gas cards. Then we ended up getting a very nice line of credit at Amazon. Then we worked our way up and got a very, very nice SBA loan. Thanks to Credit Suite, we were able to really get our business finances in order from what looks good to potential lenders. Remember, we talked about fundability and potential creditors, and we became very attractive to lenders. Went from not being able to get a loan to in the newer phases of the business getting an SBA loan. The best options are always available for those who have their credit game locked down. And that's what Credit Suite's platform allows you to do. We've been able to make smart investments in staffing, marketing systems, sales systems, product development, all these things before Credit Suite we really couldn't do. I just don't have to stress as much because we've got money in the bank to take advantage of opportunities. I'm not a stress anymore. I can keep a bank account that has plenty of cushion there. And that cushion just honestly, it makes me a better dad. It makes me a better husband because I'm not stressing out. I love this. And I love this because Josh has become a good friend of mine. And my hair literally stands on end when I read it because I'm a dad, right? And I do everything I do for the sake of my kids. And so this always touches me because it really makes me, I feel the same way. When you have money in the bank and COVID hits, you're not stressed. When things are unpredictable, you're not stressed. And what I found is the way out of not being able to sleep at night, as more than 50% of business owners can't because they can't get the capital, is just having access to revolving credit you can use. When COVID hit, we freaked out like a lot of people did. And what we did was we relied on our revolving credit to pay our bills until we figured out what was going to happen. We had that luxury because we built our business credit and were able to access a lot of revolving credit. A lot of people didn't, and they really struggled. So the key to success, the key to that peace of mind is just knowing that you have that money available. So look, as an entrepreneur, you should be able to get the money you need when you need it, but not knowing the approval standards, not knowing how to build your business credit, not being able to access financing is probably one of the things that's holding you back. Well, look, our system, if you're really interested in the shortcut, our business finance suite, it does all of those with you. You're working with coaches. You've seen a lot of people along the way, the results they're getting, the success they're having. When you're working with us, we're giving you 24/7 access to our business finance suite to do this in English or Spanish. You're getting business advisors that know way more about this stuff than I do. They're where I get my information from, that hold your hand to literally walk you through this process. Maybe not literally walk you through. They hold your hand and walk you through the process. I corrected myself because I read somewhere that literally is the most misused word in 2020. So I'm fixing that. We help set up your business name the right way, your entity, your EIN, your address, your toll-free number. We list you with 411 without paying the money that you're going to pay list yourself to do it. We help you make sure your website, your email address is set up. We actually integrate. Remember those secret credit bureaus I told you about? We integrate with them. We're the only company that takes their back-end information and makes it available for business owners on the front end. We help you get check systems. We help you get LexisNexis. We help you fix those credit reports to being compliant, bank account, merchant account set up. We help you get your BIN number with business with Experian, with DUNS number with Dun & Bradstreet without paying for any of that. We help you dispute and fix any inaccuracies on your business credit report. We have the largest supply of starter vendors you're going to find anywhere, the largest supply of retail credit, fleet credit, cash credit. Okay, we have auto finance you can get without a personal guarantee and credit check. Remember, Christine got $185,000 at Ford using our system without a personal guarantee or credit check. We offer all kinds of financing, which I didn't even talk about today. Financing based on cash flow, the 0% credit line hybrid we talked about. Less than 2% interest rates on asset-based lending. It's not even based on credit quality. SBA loans, okay, term loans, lines of credit. All of that is what you're getting when you're actually working with us. And if you are enrolling through Friday, we find the people that get the best results take action quicker. I'm throwing in 6 bonuses as well. I'm going to give you 30 days or 30-minute coaching call with a business advisor to tell them about your business. Anything you want to address to help you get capital, you've got that. And regular advising calls as well. 90 days of business credit monitoring. It's almost $750 from the bureaus. You're getting it with D&B, Equifax, and Experian at no cost as part of this as well if you're getting started by Friday. Okay, you're getting credit monitoring for only $24 a month after that for all 3. We're getting a really cool widget on your website that shows you multiple review sites because we need to manage reviews everywhere nowadays. A 28-page business evaluation report and a complete branding course. One of my buddies, Mark Inson, sells for $2,000. Okay, we're giving you that as well. So that's about $7,000 worth of bonuses. And ultimately, our value of what we've got is well over $12,000, $7,000 worth of bonuses. But if you're getting started with us by Friday, it's $29.97. Okay, that's actually what we're going to get you in on top of the bonuses, of course. Or you can break it down into 7 payments of $597. We make sure your payments are affordable. If you can't afford $597, that's okay. All you have to do is give us a call. Our number's right here on the bottom. And if you give us a call, we will work with you on payments that will be affordable for you. We'll customize a payment plan for you. We work with all kinds of sources that will finance your enrollment too to make it easy to enroll. And of course, we can help you get loans and credit lines to help you get the money to enroll as well. So if you aren't able to afford the $297 or $29.97, the $597 payments, we will work with you to make sure it works. If you like what we have, we've even got a lot of pricing options, which aren't on our website that we'll talk to you about as well. And if you don't feel that what we have is worth every penny that you get or that you pay, then you can cancel anytime within 30 days and get your money back. It shifts all the risk to us. Even if you make the first payment, we still get you access to everything. This is one of my good buddies, Sam, and I'll tell you his real story here after I read this because this helped him get through COVID. My business is Dragon Gym, a martial arts studio that was founded in 1973 by my instructor, Diego, and took over by my partner and I 10 years ago. About a year and a half ago, my business partner and I decided within 18 months, we were going to open our second location. We got connected with Credit Suite, and we were able to accelerate our timeline and open this location only 6 months instead of 18. Getting the financing meant that we could start fulfilling our dream of having 10 or more locations. They used business credit and the business credit accounts like Credit Line Hybrid and Commercial Credit to be able to open 3 locations in 18 months. They were going to open 2. They opened 3 in that time frame. Then guess what happened? COVID hit. Martial arts, needless to say, contact sport, they really got hit hard. And they used business credit and those revolving credit lines to pull them through. They opened an online course, and now they're crushing it. They're back to where they were, and they have all this online course revenue that they brought in. Plus, they opened up the T-shirts and all of their gear. They opened up an area selling all of that and have absolutely crushed it. And they not only mitigated what could have been catastrophic through COVID, but they were able to do that and grow their business by 2 new verticals, by gear, shirts, etc., and by an online, all because they use business credit. So again, here's everything that you're getting when you enroll, everything you need to set up your business the right way, build your business credit, access financing all in one place. You're getting some really cool bonuses worth about $7,000 as well, including $750 worth of credit monitoring, an awesome $2,000 branding course. I send this to all of my friends so they can actually go through and build their personal brands as well. And you should be in 2021. And of course, you get that guarantee with us as well and get everything with your first payment. So I promise you, if you stay to the end, I teach you how to get the playback of this webinar, credit monitoring for free,